On this episode of Conversations with Leaders in CTRM Technology, we'll be talking about renewables with Mr. Andre Jaeger, Senior Vice President of Product Management at ION. Hello, I'm Patrick Reams with Comtech Advisory, and welcome to our latest edition of Conversations with Leaders in CTRM Technology. Today, we are visiting with Mr. Andre Jaeger, Senior Vice President of Product Management at ION. Andre, thanks for being here.
Thank you for having me.
And I appreciate you making the time. We've spoken over the last several months, and during those conversations, you've noted that many of your prospects and clients are diversifying into renewables. Can you tell us what that means? How is that manifesting itself in the marketplace?
Yes. So I would break it down into three areas where we're actually seeing a lot of interest across kind of the existing client base, as well as kind of those areas where new clients are starting to knock at our door. So the first one is anything around renewable power. So we see a lot of the existing clients kind of getting deeper into renewable assets, or building up a portfolio of power purchase agreements, PPA contracts, and they might be on the corporate side, so they're selling green power, or they might be on the production side, so they're kind of getting the power from a renewable investor. And those type of contracts are usually combined with corresponding green power certificates, and then depending on the region the client is operating, might be RECs, might be GOOs, might be REGOs, might be IRECs. The second area is biofuels, and again, related renewable fuel certificates. That means kind of you get into ethanol. You may be starting with low carbon hydrogen, or biogas is another great example we see quite frequently. And then similar, if you are in those, you also need to kind of deal with the corresponding certificates. So North America with RINs, on the European side with proof of sustainability, or POS, and then there's still a lot of discussions happening around hydrogen certificates. And the last area, a little bit around for a while, is carbon markets, and that could be voluntary as well as mandatory. So that means any type of carbon emission credit certificate allowances. So we have EUA, CERs already for a while. Now we have more kind of on the voluntary side with VERs, but also in North America with LCFS.
So when we talk about diversification into renewables, clearly the implication is these aren't traditional renewables players like biofuel manufacturers or merchant gens in the solar or wind arena. So who are these companies, and what's motivating their move into renewables?
So first, let's start to talk about kind of why, and I think it's all about decarbonization of the energy industry and kind of related ESG targets that they set for themselves. And I think it's a broad focus, or maybe even pressure, to kind of move to a more sustainable carbon-free business model. And that comes usually from the investor side or from the society in general. So additionally, we definitely have also clients that kind of have mandatory participation, utilities on the EU allowance markets, or some refiners on the renewable fuel target side. But the biggest one, I still believe, the driver is kind of the opportunity that they see into green business. So it's an ability to differentiate, it's an ability to kind of create value. And it also has kind of decent synergy with the existing business that they're running. So, and who are the clients that we kind of talking to? So there's a lot of utilities and power marketers, is of course the commodity traders, is producers and integrated oil companies. And I think we have heard that probably multiple times, that the move from integrated oil to integrated energy is kind of big in that area. And usually kind of the activity that they're doing for themselves is combined with certain amounts of M&A activity, buying a renewable power generator or a biogas company itself. And this is actually, as I said, what we see for the existing clients, and very similar for the new clients. In their cases is similar utilities, integrated oil, and they are kind of very often have the background that maybe what they currently have on the solution side is kind of not supporting their needs from energy transitions perspective, or they just feel it's too much work to kind of update an in-house solution that was focused around particular market in this context.
So, given those points you just talked about, what are the key challenges that you're seeing as these companies do move into renewables? Is it simply lack of system functionality?
It's a mix of, there's some generic challenges, but there's also kind of complexities associated to the three areas I talked about. And those kind of specifics need dedicated solution capabilities. So let's maybe start again with the renewable power side. So there's all about representing your power purchase agreement, the PPA, and manage the life cycle of such a contract. So as I said, there's a combination of power and certificates that you might get delivered, or you kind of create an obligation for yourself. There's some nonlinear pricing, complex payout structure. You need to manage volume, usually in combination with a certain probability, because you have to forecast what a particular asset will be delivering. But you also still need to settle and invoice that contracts. And you kind of on one end want to manage that in that operational day to day, but on the other end, you need kind of the sophisticated risk management, especially also in combination with the rest of your portfolio. Then the certificate life cycle is not just for power, but also for the others. So various classifications that need to be supported on these certificates. Granularity is high. You need to reconcile against central registry kind of banks type that kind of keep an inventory of what you currently have. On the renewable fuel certificate side, you also need to kind of handle what we call attached and detached trading. That means the certificates are associated to the fuel, and you need to kind of track it through the supply chain to kind of be able to sell them attached at any point along that supply chain. And there's just certain operational events that might kind of trigger that detachment, and then afterwards you can trade those independently. Doesn't matter if it's power or if it's biogas or some other fuel production, you usually want to have kind of some synchronization from kind of what you produce and what you expect on the certificate side. So it's always kind of that position reporting across fuel and across certificates. On the other end, especially for the fuels, you have a lot of kind of similarities with traditional hydrocarbons. You need to monitor physical activity, different modes of transport, inventory, blending, etc. On the more generic challenges, I would talk about kind of definitely a need to kind of support kind of changing and evolving markets. So there's a couple of things where I would say the jury is still out. So hydrogen and related certificates, how will that be organized from a trading perspective? Or we have at the moment a lot of discussions around 24/7 power certificates. And how does that fit from a tracking versus trading perspective? And it's a key kind of differentiator to have a certain amount of flexibilities to kind of have a shorter time to market. And the other big generic topic I would want to mention is kind of the access to data, the amount of data and related granularity and the speed you want it. So it's all about real time, a lot of granular data, easy or the ability to easy combine different data sets, and for sure more and more data that kind of is demanded for in this context.
So, how is ION helping them address those various challenges?
Yes, I would even say is maybe it's more how is the clients are helping us in a certain context. Also, I think we have a very strong client community. Very vocal clients, biggest in the industry, definitely a strong focus on energy transition. And they have a strong interest in us kind of evolving. And based on that, they are bringing the right SMEs to our discussion. They're sponsoring some work, and they're adopting kind of new capabilities and provide feedback. And over the last couple of years, I would say we have kind of established the right forums to have kind of interaction on a regular basis. To kind of build up these relationships and to be able to iterate and kind of define exactly how do we need to support it from a solution perspective. And I believe that's a huge differentiator. And I think that enables us to help them at the end to kind of provide some dedicated, focused investment to support kind of energy transition related needs and provide kind of strong capabilities in that area. But on the other end, it's also about kind of they kind of communicate with each other around kind of best practice, sharing solutions that work for them. So it's kind of a give and take. So it's not just us helping them. I think we're helping each other in a very close collaboration.
So looking forward a bit beyond the established but clearly dynamic renewable markets, are there any other trends or market developments that you find particularly interesting going forward?
I think the first one I would want to highlight is definitely more variation, more certificates, more creative green business ideas, green technologies that need to be supported from our solution. So as I said before, flexibility is key. The other big topics that I think will take off in the next months and years is low carbon hydrogen in form of ammonia, probably. So it will be interesting to kind of see how that develops, if we kind of work with different hydrogen colors, if we have blue hydrogen, green, pink, or maybe the certificates just have a dedicated color and we can focus on the moving of the fuel. It's definitely representation of that corresponding conversion, liquefaction, regasification, power to hydrogen, and a lot of opportunity to kind of optimize around that. I think in a similar direction also, I see a lot of need for optimization around the certificates, a lot of different classifications across those different schemes that are distinguished. Sometimes you're not specific on a green, so it's all about for you to kind of figuring out what is the optimized certificate I can deliver at the lowest cost. So definitely a lot of potential to kind of combine some of the solution that we have with additional level of optimization. And the other one I mentioned before, which will be very interesting, is the 24/7 certificates. So you have the situation that the customers, not our customers, but the customers of our customers, want to have the ability to be 24/7 green. So they just don't want to be just neutral on an average. They want to, for each hour where they consume energy or power in this case, they want to know that it was produced from a green asset in this case. So it's about kind of providing hourly evidence, but it will be interesting to see how that kind of tracking requirement will eventually evolve into something that's kind of a little bit more traded or trading focused, because I think it will be hard to get to the right level of liquidity if you really get to the point that you trade hourly certificates. So it will be interesting to see how that kind of need on one side will evolve into kind of how it will be represented from a trading perspective.
Well, clearly it's going to be a very interesting market over the next several years, and it sounds like ION is well positioned to address those opportunities as they emerge. But I'm afraid that's all we have time for, but I do appreciate you taking the time to be with us today, Andre.
Thank you, Patrick.
Well, that's it for us on this latest edition of Conversations with Leaders in CTRM Technology. For additional videos like this, or for our CTRM podcast, CTRM Radio, please visit the ctrmcenter.com website or our corporate website at comtechadvisory.com. Thanks a lot.